Hello there, my friends. Chris Marcus here with you on Thursday, June 8th, on behalf of Arcadia Economics. And today we're going to dig into a few of the transcripts from the recent silver manipulation case, I guess you would call it now. As you may be aware, this past Friday there was a former Deutsche Bank trader named David Liu. I don't know if you would say he was arrested or, in either case, the CFTC took action against him and he signed a confession of some of the illegal activities he participated in the silver market. And if you go to the CFTC's website, you can actually read the release. And this, again, is just my interpretation, but it sure sounds like as part of the deal that he made, excuse me, that not only is my read was that he's going to continue to provide information about what he's aware of, including about other banks, which, again, I'm not the legal scholar, but that would sound like collusion if it's between banks. In either case, the reason I thought this was so fascinating is, again, I remember back when I was still on the New York Stock Exchange and I was working for a trading firm, would regularly hear our compliance guy. He would say that I think it was he would generally say 2 out of every 3 things that I type are going to be read by someone. Whether that was the firm's internal compliance or whether it was someone outside of the firm like an SEC, or in this case, now the CFTC is looking at these things, a lot of lawyers. Now the transcripts have become public. A lot of people can see it. With the point being that there's certain things that going into the deal. There might be things that NFL rookie experiences that I just don't grasp because I'm not there. So again, putting it into perspective, I would say that certainly on a trading floor, but for any of these big organizations, I mean, you kind of know this going in. So you'd think if you're going to commit any felonies, maybe you want to be a little bit careful. Although that's why today we're going to read some of the transcripts. Again, I think it's unfortunate that this is what today's markets have become. I think, whether it's the stock market, the bond market, the idea that the Federal Reserve just decides what interest rates are going to be in and of itself is market manipulation. I guess it depends on how people look at it and what they're willing to tolerate. But certainly for people who have been seeing what's going on economically, have sat down and said, geez, there's all this debt and borrowing. We had these bubbles that keep imploding. Something doesn't seem right, and have looked into precious metals and then wonder why the price doesn't go anywhere. Well, today you're going to find out. So let's pull up a few of these. And especially, I mentioned in our last video that I actually recently joined a class action lawsuit against the banks. So I keep reading these and thinking, I have mixed thoughts on today's legal system of how often we get justice, although, anyway, we'll let you hear some of the comments and you can decide for yourself. What's interesting is that a lot of these are between banks. So here we have UBS Trader A to Deutsche Bank Trader B. If we are correct and do it together, we screw other people harder. I mean, enough said. Then we have UBS Trader A again. An avalanche can be triggered by a pebble if you get the timing right. And silver's still here. You can easily manipulate silver. And then in reference to a UBS supposed manipulative influence by an unnamed party, you guys were the silver market. So a couple different comments there, all of which probably on their own are all terrible, but it's just, these aren't gray areas if you're working on a trading floor. A, that you're communicating this with other outside organizations, certainly any business, you tell people we screw you harder than, other market participants probably not appreciating this. And interesting, talks about the avalanche being triggered by a pebble. Now, there are differing theories on how the manipulation actually occurs, but the one that's always fit what I've seen, read, and heard, and studied, and investigated myself is basically that you have a lot of stops. And once these stops get triggered, then you can get some of the high-frequency trading algorithms going. And with an example being that, let's say a lot of people say, I want to sell if something goes below $20. Maybe it's a stock that's trading $20.10. Now, should it go below 20, people want to have their investment protected, so it triggers what's called a stop. So can kind of trigger some more selling, and then there's other traders and especially the tech chartists that often will then get signals. So you can push something a little and then it accelerates because of the way other people are positioned. So here when UBS Trader A says an avalanche can be triggered by a pebble if you get the timing right, that's my understanding of what's been going on and why you see a lot of mysterious dips that seem to make no sense. So anyway, we'll continue on. UBS Trader A, this guy was really on a high rate reel. A couple comments here. Gonna bend this silver lower. Another one, I will bend it lower, told you. Another comment, ha, cool, it's gonna get ugly. Then followed up by, use the blade on silver. Looks like he's saying right now it'll hold up. Deutsche Bank Trader B, yeah. UBS Trader A, gonna blade silver now. I mean, it's hard to imagine that you would type this out. But anyway. Then we have UBS Trader A. Go make your millions now, Jedi Master. Please write me a check when you're a billionaire. I teach you a fun trick with silver. To which Deutsche Bank Trader B replies, show me the money. And of course, one of my favorite parts about the article here is it mentions some of the other banks that are involved. Of course, can't just be one or two. Now it references Barclays Bank, and we have here Deutsche Bank Trader B instructing Barclays Trader A, today you smash. Okay. It's alleged that Barclays and Deutsche Bank shared information so often that Barclays Trader A remarked, we are one team, one dream. Materials in the memo even include Deutsche Bank and Barclays precious metals trader agreeing at one stage to stay away from silver for a week. The traders, of course, knew it was terribly wrong, with Barclays Trader A responding to Deutsche Bank Trader B instruction to push silver. Ha ha ha. LOL. I don't think this is politically correct on the chat, which I would say that I agree with that. Of course, then Merrill Lynch shows up in some of these. Here's a Merrill Lynch. We had similar. I sweep them. Fuck these guys. Okay. And there's Standard Charter getting involved. So I think you get the point. It's I think we're going to see a lot more things like this coming out. I'm personally interested to see what happens with David Liu and the new CFTC commissioner, James McDonald, who, it seems like the evidence is there. It also seems as if a lot of the same manipulation is occurring on a daily basis. So that's has also been fascinating to see that even after the evidence of rigging came out, it hasn't necessarily stopped taking place, with the simple evidence of that being that there is a large short position, and I think you'd have metals a lot higher if it weren't there. So We'll see what happens. Certainly interesting times, and if you have any questions, leave them below. Otherwise, subscribe to the channel, and we'll keep you posted on what's going on. I think it's going to be a fascinating summer, fascinating year, fascinating times ahead. And anyway, we'll keep you posted before it happens. Thanks again.